Hello and welcome back to the channel. This is episode 2 of Retail versus Smart Money, and today we're going to be looking at a Euro USD position that I took not long ago inside of my community and in my personal accounts. Before we get into today's video, I just wanted to let you know I have a free Forex trading course which you can sign up to using the link in the description. So first of all then, breaking down the retail view, we can see overall on the 4-hour time frame that this market is in a downtrend. Now structure is one thing that retail uses pretty much the same as smart money traders. However, the only thing that retail miss out on is they actually use trend lines rather than structural highs and lows to determine the the state of a trend. So if we look then, we've seen obviously two breaks of structure. We are obviously moving in a downtrend. We can see that very clearly. And if we look at where price is right now, we will see that we have what may look to some as a triple top. So if we mark off this area, we can see a triple top in the market. And if we also get our trend line tool and connect the lows here, we will see that we have got a trend line as well. So what many retail traders may see at this point is that we do have a trend line which is now being slightly pushed through. So now we've seen this triple top, what we could see is some form of motion like this, right? Where we have the triple top. Normally from triple tops we sell off, or at least retail traders think. So we may look for a break of the trend line, a retest, and then a sell-off to continue the downtrend we have on the higher time frames. So this is the view that retail traders may be looking for. Now, if we see then, we did get a large break of the trend. So at this point, retail traders will be looking to sell from either a support area, turned resistance like this, or obviously the trend line retest. So the areas that sellers will be looking for is somewhere like this, or somewhere like this. Now, at this point, as well as the sellers who are waiting for confirmation, we will have had breakout traders triggered into the market who probably had orders somewhere like this to actually ride the market down. Now, what's actually going to happen to these retail traders is after a little bit of consolidation, the market is going to make a large move back up, take out the breakout traders, take out those sellers who sold on a retest of this support turned resistance, and also take out the sellers who were looking for a trendline retest using the triple top for their stop loss. So as you can see, all of the retail traders would have got wiped out from this market movement, right? We had the sell-off, breakout traders, support, breakout traders, resistance traders, and also the trendline retest traders all wiped out. Now, the way that I viewed the market was in a very different way. I actually look at the current structure. I think about liquidity, I think about imbalances, and I think about supply and demand. So what I'm going to do now is break down my view of the market and show you what it is that I saw from a smart money perspective. Now, the one thing that I agree with to the retail is the overall downtrend, right? We saw clear lower lows and lower highs forming, so we are definitely looking for overall selling opportunities. Now, what I see differently though is supply and demand, imbalances, liquidity, and of course the substructure. So looking at the market here then, what we can see is, first of all, we had this little break of structure here, which was formed by this supply zone. So what we do here is actually mark on this supply area onto the chart. Now, the next thing we can do is look towards this triple top, so to speak. What I see here are three generally equal highs where I know retail traders will be selling the market. So we have sellers here, and sellers here, which tells me that there's going to be stop losses above this level. So this for me leaves open an imbalance as well. And that gives me a formulated trade, right? So we've got here an imbalance, we have a supply zone, and we have equal high liquidity. So generally what I'm going to expect to see happen is the equal high liquidity to be taken out, the imbalance to be filled, and the supply zone to be retested before the market makes a real move down. If we then look towards the substructure, so that's the overall swing structure, right? The substructure is the structure within higher time frame trends. So from this point onwards, we are actually looking at the substructure because we can see from this area here, we started forming higher highs, higher lows, higher highs, and at this point we haven't actually formed a lower low. So for me to really see confirmation of downside from where we are now, I would have to see a break of this. So the two options I'm either looking for is a break below this low and then a pullback and sell, or a retest in this area to continue this substructure uptrend to fill the imbalance, take out the liquidity, retest the supply zone, and then sell off. So if we bring our focus to this substructure area, then we can actually look here first and see we've had a bullish break of structure at this point. So this was the first higher high. Then we had a higher low. Then we had another higher high, which has also taken out this structure point as well. So this is really telling me that we are still in a substructure uptrend. And if we can find a demand zone down here, we could happily buy from this area to continue the market up. Now, another thing I see is equal lows as well, right? We have the equal highs, we have the equal lows. This is actually looking like a sweep of the equal low liquidity. Anyone who was buying from this support area to actually continue the market up, who had a different retail view, is also going to be getting taken out now by this downside move. So we expect liquidity to take out either side of the range. We see equal lows, equal highs. The equal lows have been swept, so now we can expect the equal highs to be swept as well. So all we need to do is look for a good area to buy. If we now go to the hourly time frame and grab our demand zone tool, we can see here a very clear demand zone at the bottom of the trend, which is where the upside movement began. We had this consolidation area, we had this demand zone, and then the market shot up from there. What we've also got pointing at this area is a little bit of an imbalance as well. Once again, imbalance is coming into the picture. So you can see here we have the liquidity, imbalances, supply and demand, and the market structure in our favor, trading the opposite way to the retail traders. So from this point onwards, we did see a little bit of consolidation come into the market. And after this consolidation, we did come down into the zone. So what I actually did was place a long order around the 840 level, which was actually a refined zone within this larger zone. My stop loss was under the zone, and my target was straight into this. I actually went for a stop loss just under these lows into these wicks. It was around a 9.5R position. I actually got 7.5R out of it because I took partials when we hit this area. But as we can see, after a little bit of consolidation, the market did come down, tap into the zone, and then it really began its upside move. So this is where we were triggered in on the 840 level using a refined demand zone. And from there, the market shot straight up and fulfilled the target very, very quickly. You can see here the difference between my approach and a basic retail approach is worlds apart. We've had a clear buy trade with a very large profit target, bringing us into a great selling point, whereas the retail traders were actually looking for sells straight from this area, which obviously now will have all been taken out. Now, the worst thing is, at this point, after this bullish move, the retail traders may see this as another higher high in the trend. They may readjust their trend lines and look to continue buying. But because I'm in line with the order flow of the market, the supply and the demand, and all of the other concepts we've spoken about, I know that from this supply zone, we are likely to get a large selling move. And if we look at price action, that is exactly what happened. So the retail looking to sell did not have the wrong idea on the bias of their trade, right? They saw a trend line break, they saw a triple top, and they saw a downtrend, and they were looking to sell into that. That is not entirely wrong, but the trend line and the triple top where the problems begin, because these are bad concepts and poor concepts to be using in the market. You need to be in line with the supply and demand, market efficiency, which comes down to imbalances, and also the substructure. Trendline break does not mean the structure is broken whatsoever. It's up to the higher highs and higher lows, right? If this higher low was taken out with this large move down, that would actually then signify a break of structure, and I would then be interested in selling into the trend. But because we didn't break the higher low, that means we're still in an uptrend, right? We have higher high, higher low, higher high, higher low, higher high. And then when we hit that supply area, that's where we can then begin breaking the structure, forming a lower low, and continuing that downside move all the way through these lows and beyond. So you can see that this approach is much more effective. I've broken them both down for you. You can see the benefits of both. Well, really just the benefits of this approach over the smart money approach. We obviously have a much clearer view of what the market is doing. We are not just drawing lines on the chart and hoping it works. We are understanding the order flow, the market efficiency, the supply and the demand, the liquidity, all of these things included give us a good picture of what the market is doing and allow us to understand the reason behind the moves that we're executing. So I hope you've taken some tips away from this video and can now start breaking out of your retail mindset and focusing on a smart money approach where you're actually following the order flow of the market. If you found the video beneficial, please do drop a like and make sure you subscribe for more episodes of Retail versus Smart Money, as well as new educational videos that I bring out every single week and weekly market analysis. Most of all, I hope you found value and I will see you in the next video.